Are you struggling to find a profitable trading strategy? If you are, then stick around to the end of this video because I will be showing you a profitable trading strategy that you can use. So we'll take a look at the charts, but before we do that, please check the link in the description. You can see the broker I use and the link to my TikTok account, which I sometimes go live. You can also see the link to my the platform which I use is a very good platform you can use. You can even buy an instant funded account and you can withdraw instantly. The withdrawals are very fast, right? So you can also see the link to my Telegram group. In the Telegram group, I provide free signals. So make sure that you check out the description of this video. And if you are new to this channel, consider liking, subscribe, and leave a comment on what we should cover next. So let's go. Let's take a look at the chart. So looking at this example on our screen here, what we can see is we have a bullish market here, right? So we have the market pushing up, creating this inducement, then creating a higher high and creating a higher low. So after taking out this inducement, price created a higher low here and created another higher high here, creating another higher low here. So these zones are known as our external market structure points, right? So this is our external market points, right? So now here we have this internal market points. This is a minor these are referred to as internal market swing points, right? So this is an inside move. This is an inside move in this case because it's within this trend. So this is just a correction within this trend. So here you also have minor lower lows and lower highs, lower lows and lower high. So now in this chart, what we have here is a break of structure. We have this break of structure here. And why do I say this is a break of structure? First, you can see that our level of inducement in this case is this level of inducement here. That's our level of inducement here, right? You can see that before price break this structure here, price took out this level of inducement. Price went below this level of inducement, so breaking this structure. Now, when this happens, this break of structure is known as a confirmed break of structure. And what price needs to do after that or before that is price needs to create another inducement within this leg so that the first inducement that is taken out, if it happens that this first inducement is taken out and market breaks above here, is considered a valid break of structure. But if it happens that the market just pulls somewhere around here and did not take out this first inducement and break above, this is not considered as a valid break of structure. So that's where many traders make the mistake. So now, as you can see here, what happened here is this market push below here. When this market push below this point of this in the first inducement here, this higher high, this higher high here was confirmed as a confirmed higher high. But as market was still playing around before taking out this inducement here, down right down to here, this was just structure. But as it took out this first inducement here, this higher high was confirmed. Now, as it took out this first inducement, then it took out our decisional POI. Or this in another case, this can also be engineer liquidity. Then before finally mitigating our extreme POI and breaking structure to the upside. So in this case, this will be another valid. This is our another valid break of structure here, right? After this valid break of structure here, so after this valid break of structure here, what are we waiting for? We're waiting for market to take out the first inducement, the first pullback. The first pullback is known as inducement. So now, as you can see here, market created this pullback here, and then finally it pushed below, took out this pullback here. So this high is now confirmed as our higher high in this case. And if as market breaks above, this is another valid break of structure. This is another valid break of structure. So now I know you might be asking, how can this benefit you in a strategy I talked about, right? So what you can see is once you know where to take your trades. For example, take a look at this. Once market takes out this inducement here, you can look for the point of interest below this inducement to take a trade from, and then you target this higher high here. And same here, after market has has broken above this structure and taken out this first inducement here, has taken out this first inducement here. Now you can look for another point of interest here and take your entry. I know that many people be asking now, how do they choose this point of interest here? But you can see that if you know this structure I'm teaching you here, you have already increased your probability. Why? Because first of all, you might be somebody that used to have 50, you used to have around 35 win rate, right? Now, just knowing this structure, let's say, okay, you took this as your point of interest. You took this as your point of interest, and market just give a small reaction. Many people will break even here, or some people will even collect partials here, which will add to their winning trades. But what many people will do is, even if it hits your stop loss and you choose the next point of interest below here, right? And this happens to be the right point of interest. You can see that you would have lost around you would have lost yeah, 1:1 here, and from here you would have made around 1:10. So you will see that this will increase, only knowing this structure will increase your win rate by 50%. Yes, you'll be at least 50%. And using and all of us know that if you are using a good risk to reward ratio, 50% is a very good win rate if you use good risk management. So this is what I wanted to show you guys. So now we all know that it's not every day that the market will form like this, right? So now what we have here is we can also trade this internal structure from here to here. But you should know that before you trade this internal structure, you should know that you should first master this one, because this internal structure, first of all, is low probability. Now, how do you trade this internal structure? Now, first of all, what we wait for here is for price to take out the inducement, same as this big structure, but just the inverse. So we wait for price here to take out this inducement and mitigate maybe a POI here, and we are looking to sell. So here, this will be our inducement. We'll wait for price to maybe take out the inducement, and after price has taken out this inducement, if it gives a single candlestick order block here, we can sell and we target just this here. Or if it doesn't give a single candlestick order block, we can wait for a pullback into the extreme POI and we sell and we target that here. But when doing this, keep in mind that this is our external points. This is our external point. So you should not go for a huge risk to reward, because these trades are counter trend. They have low probability and they can reverse on you at any time. So you should take your risk management into consideration and other factors. So let's take a look at the chart. I will show you an example right down here. So if you are new to this channel, guys, you can consider subscribing. Please subscribe and like the video. Leave a comment on what you want me to improve on, or on what you want me to cover next. So as I mentioned in the introduction, the links to my social medias are in the description of this video, and the link to my TikTok account also. The TikTok account, I normally I trade live on the TikTok account sometimes. So if you want to trade live with me, you follow me on TikTok and we can trade live. The link to the platform which I use is a very good platform. It's also in the description of in this video, so you can check it out. And even the broker that I use. So now back to the explanation, right? So what we have here is we have this market. It's pushing up. This is an uptrend, right? So if you use this tool to demonstrate what I just said is this, you can see here that the market is pushing up here. The market created this first pullback here and then push above this zone and then finally taking out this pullback here. So when it took out this pullback here, this now we're waiting for it to break above this structure and close with a candlestick so that this will be confirm our break of structure. So that is exactly what happened here. So when this happened here, this now was our confirmed break of structure. It's a confirmed break of structure. That is our confirmed break of structure there. Now, in this confirmed break of structure, what is next? So what is next? We wait for market to create some sort of inducement before continuing upward. So in this case here, what we see is market created this inducement here. Market created this inducement here, right? When market created this inducement, it mitigated the zone, the this zone. You can see that this is where the mitigation came from. The week of this is where the market indicated and finally pull up. Now, after pulling up, market broke above this. So this is another confirmed break of structure. Why is it confirmed break of structure? It's confirmed because the market took out inducement before breaking the structure. So now, what are we looking for after this confirmed break of structure? We are looking for inducement. The first inducement, the first pullback is called inducement. So this first pullback to be taken out and for market to break above, to break above, then we can then mark our change of our break of structure. So in this case, market failed to break above here. So now this high will be transferred here. Now, and you can see that from here now, the market finally broke above this with a candlestick. When market broke above here, we are looking for buys at these POIs. You can see that this POI here is already mitigated by this, and this POI here is mitigated by this. So now where are we looking for our buys? We are looking for our buys and this unmitigated POI and targeting this high. So if you can see here, you can see that this market came straight to this POI. It came straight to this POI and mitigated it. After mitigating this POI, you could go in for your trade using smaller time frame confirmation. So you have something like this. You have something like this and you target this. That's around 1:3. So that's a good risk to reward at least. So targeting that, and you could have seen that you would have made some extra 1:3 there. So okay, so also as I mentioned about counter trend trading, what you can see is here we have a similar situation of the counter trend trading, right? So now what you'll be looking for here is you are just looking for the very thing that I just showed you here, but in a smaller time frame. In a smaller time frame, maybe the medium of this time frame, maybe 2 hours or 1 hour. So now you are just looking for the reverse of this in this trend, but you are keeping into consideration this your swing points here. You should know that this is your swing point. If you are selling from here, you should know that this is your swing low here. Anything, you should not target anything below here. right? Because market will not pull above here unless he wants to create a change of character. So guys, I think that will be all for the video for today. If you enjoyed this video, leave a like, subscribe to my channel, and support me, guys. So have a nice day and have a nice trading week. God bless you all.